Hello everyone, Fiscal Loom here. In today's video, I will be explaining how to invest in the stock market, beginner's guide. Are you ready to start investing in the stock market, but don't know where to begin? Don't worry, you're not alone. Investing can seem overwhelming at first, but in this video, I'll break it down step by step so that you can start building wealth the right way. Whether you have $50, $500, or even more to invest, you'll learn exactly what to do. Let's get started. You may be asking, why should you invest? Before we dive into how to invest, let's talk about why investing is so important. You've probably heard that inflation eats away at your money's value. If you keep your cash in a regular savings account, it loses purchasing power over time. The stock market, on the other hand, has historically provided an average return of around 7 to 10% per year after inflation. That means investing is one of the best ways to grow your wealth and achieve financial freedom. Understanding the stock market. The stock market is a place where investors buy and sell shares of publicly traded companies. When you buy a stock, you're essentially owning a small piece of that company. Stocks can go up and down in price based on company performance, economic conditions, and investor sentiment. In the US, the two biggest stock exchanges are the New York Stock Exchange, NYSE, and the NASDAQ. Companies list their stocks on these exchanges, and investors like you can buy them through brokerage accounts. Choosing a brokerage account. To start investing, you'll need a brokerage account. A brokerage account is like a bank account, but instead of holding cash, it allows you to buy and sell stocks, ETFs, and other investments. Some popular brokerage options for beginners include Fidelity, Charles Schwab, and Webull. Many brokers today offer commission-free trading, so you don't have to worry about extra fees when buying stocks. Once you choose a broker, you'll need to sign up and verify your identity, link your bank account, and deposit funds to start investing. Investment options for beginners. Now that your account is set up, let's talk about what you can invest in. Beginners often ask, should I buy individual stocks or invest in something else? Here are your best options: index funds and ETFs. These are baskets of stocks that track the market. Examples include VOO, Vanguard S&P 500 ETF, tracks the S&P 500, which includes 500 of the largest US companies. SCHD, Schwab US Dividend Equity, ETF, focuses on high-quality dividend-paying stocks. QQQM, Invesco Nasdaq 100 ETF, tracks tech-heavy stocks like Apple and Microsoft. Individual stocks. Investing in companies like Apple, Tesla, or Amazon can be rewarding but riskier. Beginners should start with ETFs for diversification. Many long-term investors prefer ETFs because they reduce risk and offer steady growth. How much money do you need to start investing? A common myth is that you need thousands of dollars to start investing. But with fractional shares, you can invest with as little as $5 or $10. Fractional shares allow you to buy a small portion of a stock instead of a whole share. This means even if Apple stock costs $3,000, you can still invest $50 in it. Long-term versus short-term investing. There are two main approaches to investing. Long-term investing, holding stocks and ETFs for years, focusing on steady growth. This is best for beginners. Short-term trading, trying to buy and sell quickly for profit. This is risky and not recommended for new investors. Most successful investors follow a long-term strategy, investing consistently and letting their money grow over time. Avoiding common mistakes. Many beginners make mistakes that can cost them money. Here's what to avoid. Trying to time the market. No one can predict when stocks will go up or down. Instead, invest regularly. Investing money you need soon. The stock market is best for long-term growth. Don't invest rent money, not diversifying. Don't put all your money in one stock. ETFs help spread out risk. Letting emotions take over. Stocks go up and down. Stay patient and stick to your strategy. Strong investment habits. The key to success is consistency. Here's how to build a strong investment habit. Set up automatic investments. Many brokers let you auto-invest every month. Reinvest your dividends. This helps your money compound over time. Keep learning. Read books, watch finance videos, and stay informed. And that's it. Now you know how to start investing as a beginner. Remember, investing is a journey, and the best time to start is today. If you found this video helpful, make sure to like, subscribe, and comment below with any questions. Thanks for watching and happy investing.